Bitcoin's market news, $250,000 dream or $97,000 crash. Bitcoin hovers just above $105,000, caught in a tug-of-war between institutional euphoria and macroeconomic anxiety. With predictions swinging wildly between $250,000 and $97,000, the next move could define the decade. Today, we explore why the world's most powerful investors, politicians, and traders are zeroing in on Bitcoin, and what that means for you. Bitcoin has cooled slightly after briefly breaking past $111,000 last week. As of today, it's down 0.3%, trading at $104,950. Despite the dip, Bitcoin's year-to-date gain remains impressive at over 11%. But there's tension in the air. The momentum that carried us through the halving season seems to be stalling. Despite short-term corrections, the smart money keeps buying. MicroStrategy, led by Bitcoin maximalist Michael Saylor, just added another 705 BTC for $75.1 million. That's their 8th consecutive week of accumulation. Overseas, Japan's Metaplanet made headlines by acquiring 1,088 BTC, elevating its total holdings to 8,888 Bitcoin. This makes Metaplanet the 8th largest public holder of BTC worldwide, and it's not stopping. Their strategy? Use Bitcoin as a financial escape hatch in a weakening yen environment. What started as a niche experiment by tech-savvy firms has gone institutional. Today, even public pension funds are rumored to be considering small crypto allocations. BlackRock, Fidelity, and Franklin Templeton have all built exposure into their ETF products. The message is clear: Bitcoin is being reclassified, not as a speculative asset, but as a strategic reserve. ARK21 Shares recently announced a 3-for-1 share split of its Bitcoin ETF, effective June 16. Why does this matter? It makes high-priced ETF shares more accessible to retail investors. This tactic has been used by tech giants like Tesla and Apple to great effect, and now it's entering crypto. It's not just a move for optics. It's a signal that crypto investing is entering its mass market phase. Las Vegas played host to the Bitcoin 2025 conference, and the political implications were profound. Vice President J.D. Vance delivered a keynote signaling the administration's intent to establish the U.S. as the global capital of Bitcoin. His message? Regulatory clarity is coming, and it's coming fast. In his speech, Vance hinted at something bigger, a strategic Bitcoin reserve. Similar to the Strategic Petroleum Reserve, this initiative would involve the US government acquiring and holding Bitcoin as a national asset. It's a direct challenge to inflation, central banking limitations, and even the dollar's global dominance. The idea is gaining traction, and not just in the US. On-chain analytics reveal a growing number of long-term holders. Addresses that haven't moved Bitcoin in over a year are at an all-time high. Yet, the Fear and Greed Index sits at a cautious 53. Reddit, Twitter, and TikTok show a fragmented sentiment. Half the market expects liftoff, the other half expects pain. Meanwhile, whales, those holding 1,000 BTC or more, are remarkably quiet. Accumulating. All preparing to sell. Fundstrat's Tom Lee has doubled down on his $250,000 year-end prediction. He points to ETF flows, political support, and scarcity economics. But not everyone agrees. Critics warn of overheated derivatives markets, excessive leverage, and possible profit-taking cycles that could push Bitcoin back to $97,000. This duality, sky-high expectations versus brutal reality, creates the volatility that defines crypto. Technically, Bitcoin is perched on a knife's edge. The $104,000 support level is being tested repeatedly. RSI stands at 58, neutral territory, but leaning bullish. Bollinger Bands are tightening, a classic indicator of an impending breakout. Whether it's up or down, that remains the billion-dollar question. The external environment remains unpredictable. US inflation refuses to retreat. China's housing market is in crisis. Oil is spiking. And geopolitical tensions are flaring. In this context, Bitcoin is seen both as a hedge and as a risk asset. It all depends on who's holding it, and why. Bitcoin is at a fork in the road. Institutions are piling in. Governments are drafting playbooks. The charts are winding tighter. Whether the next big move is up to $250,000 or down to $97,000, one thing is certain: this decade will belong to digital assets. And for those watching closely, the signs are everywhere. The question now isn't if Bitcoin will change the world. It's whether you'll be ready when it does.